Happy first day of March, traders. It's 8:01 a.m. Chicago time on Monday, March 1st, 2021. This is episode number 1946. Thanks for joining me again. Another month is behind us and a new month is in front of us. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, bullish all across. Let's jump right into the Convergent Trading Summary, pre-market summary sheet. Lots of blues today, lots of blues. With the market higher, led by silver this morning, up 2% on silver, trading at $26.98.5 or 54.5 cents up. The Russell taking a really large push higher right off the open. The Russell's up 39 points, 39.4 points or 1.79%, trading at 2238.6. Again, pretty strong performance there on the Russell in the overnight session on the reopen last night, Sunday night. Euro Stoxx 50 representing the Eurozone here. Up 51 points or 1.41%. The NASDAQ is up 161 points, 161.75 points or 1.25%. The S&P is up 41 points plus almost 42 points or 1.1%. The Dow's up 337 points. And get this, the Bund is up almost a point. Or 0.57%. Gold is up, trading at $17.36, up $7.20. And the 10-year is up 16 big ticks or 32 small ticks in the futures. Crude oil is up 21 cents, trading at $61.71, holding steady above that $60 mark. And the bonds are up 9 ticks. The dollar is also up. Wow. Hot mic. Okay, let's turn that down. Not sure why it's hot this morning. So the dollar's also up with gold, with silver. It's all just, money flooding in, I guess. The yen is up as well. The cable is off, but very, very, very small. And the euro trading at 120.57 is off just slightly. It is quite incredible that pretty much everything is up after all the selling last week. If you recall, we were going down with the treasuries and gold last week, and now we're moving up with treasuries and gold. It seems like all of the entire market is correlated with itself. So very interesting action this morning. I'll be honest with you, my expectation coming in, given the way the market closed, was for lower lows. I was expecting the market to make its way down into 37.51 in the ES. That was completely wrong. We gapped and ran up. Let's take a look at what was expected for Friday in our review segment. But for today, the S&P again in a P-shaped profile, some real short covering action going on, a quick squeeze, a gap up and a squeeze on the open. Currently 290,000 contracts, so a little over 50% higher than what we would expect. Pretty wide range, 44.5 points. Overnight inventories 100% long, 100% long. We have not touched Friday's close. We just ran away from it. So the inventory is 100% long, and that's where we stand. Notice the rotations right here. The rotations right here in front of you for the different products. The rotations have expanded, have increased a fair amount. The harmonic rotation for the ES is now up to 7 points, meaning for someone using a 1-minute chart, 20 sessions back, RTH only, one standard deviation is 7 points. What does that mean? That means up to 7 points in a 1 minute rotation. In a 7 point swing in a 1 minute rotation is considered usual or normal or inside of the 68.3% of the population that's being viewed. And I believe that's on some 700 or 800 rotations. So the sample size is large, high confidence interval. This means that our stops need to be wide. So really important to note that unless you're some sort of sniper, the market is swinging wide enough that we have to widen our stops, reduce size, widen our targets as well. Rotations work both way. So that's where we stand. Anyway, that's in this gray box right here on the summary sheet. These rotations are listed for the various products. 28 points at a NASDAQ, up to 28 points is considered normal. Up to 66 ticks in the Russell, 44 ticks in the Dow, and 20 ticks in in crude. That's what these rotations are. These are updated every week, and it's important to keep track of what that is because it represents volatility and it represents an adjustment that we have to make to our trading to reflect the market. Here's our review segment. On Friday, the expectation, given how we were postured on the open, and I go over it a fair amount, the expectation is that we are likely to pull back on the open, and I was looking forward to push into the 2850, 2862 and target 2880. Did not happen at all. Market was not in agreement here. The secondary is a squeeze up that impulses down, and then the target would be 94, putting us in the gap. The gap mid is 37.88. That's the gap mid, 37.88. That's this price right here, this gray line. But the main target on scenario 2 is 94, and that's the scenario that actually played out. Here's what Friday looked like. Let's turn off our stock zones for today. Here's what Friday looked like. Come on. A lot of rotations, so I can't fit it all on one screen. Busy day. So there's the open. It's an open auction in range, basically in value, even though the prior day was mainly trending down. But we ended up really discovering value on Thursday. And then there's the impulse. So we expect it to push up. This is the push up we're looking for. And then the impulse down. This is what I marked with an arrow. That's the impulse down. And the expectation is it would tackle the 3,800 and the target is 94. 94 is right in here. 94 right in here. It fell through and it hit basically the gap mid right there. The price I'm pointing out where it says gap 2, that reads 2/2 or February 2nd. The gap mid was tagged, and then it rotated pretty strong. It rotated pretty strong on the way up. Really very large rotation. The largest rotation of the day was positive. Puts us at the mid. The mid was only good for maybe 5 points in this instance, and then it squeezed right through the mid back to the OS low right up here and consolidate, and then it finally breaks into the opening swing. This region right here breaks into the opening swing and squeezes the IB. The IB stat was still open, and it looked like it was migrating away from the IB low. So the best chance is the IB high, but really at this point right here, it could have gone in either direction. It could have fallen right back off, but it ended up pushing up and causing a range extension into the 38.58, still having a hard time maintaining price above the 38.50, and then consolidated for the rest of the session, just sat sideways into the weekend. So as we push forward, consolidated for the rest of the session. And then the last couple of minutes, we made another run for the IB high, and then we had this impulse down, very big rotation down, and finished near lows. And my expectation is because it finished near lows, near this 37.94, the expectation is, as we come in, is that it would probably break through the gap, move away from the high volume node here at 94, and work itself down into 37.50, which did not happen. Instead, the market was quite bullish. So the I'm not sure what's driving this, but Reuters is saying U.S. stock index futures jumped as Johnson & Johnson's newly approved COVID-19 vaccine and progress in a new 1.9 trillion coronavirus relief package boosted investor sentiment of a swift economic recovery. As you heard, J&J is a single-dose vaccine that finally got approved here in the U.S., and they're working out the distribution now. They're really expecting, and the vaccination program, the federal vaccination program, is actually ahead of schedule. They have vaccinated more people at this point than planned. So doing well there, and there's really an expectation that we may see a normal summer this summer. So fingers crossed, hopefully that's true. We'll see how that goes, but so far so good. The Friday close brought us from a quite bullish delta, so this looked really good for continuation, to a neutral delta, basically back to zero, and we are well below the open. Again, another reason I expected this 37.94 to drop, but maybe this is news pushing things around, but I could tell you that the action here is not as expected given what we've done. So we have impulse down on Thursday, consolidated on Friday, put in the lower high. The lower high, this is the continuation leg, and sat sideways, basically a balanced day, and it looks like we are still holding this balance down here in the 38.30 region. So you could see we ran up. We have a P-shaped profile. This tells us there's likely to be short covering. Short covering, we're staying ahead of the full session VWAP and the full session mid, and we are pushing above the 1 vol sigma already, the 1 volatility sigma on the close. It really doesn't matter till the end of the day, but the market's already stretched. We've already covered quite a bit of ground from Friday's close, is what that says. Next area is up 62.71.5, and then the 38.80 above. Decent delta this morning. This looks relatively bullish. Okay, let's take a moment, and again, 311,000 contracts done, about 50% more than normal. Let's take a look. So this here is the daily composite. These are RTH only bars, okay? And we have had, a nice run up. This is the gap that we have been fighting in. This is the gap that was half filled on Friday right here. And you can see that we've done a great job one-time framing up to new all-time highs. We broke it here inside day, broke to the upside, and then we made a new all-time high. And since then, we've put in lower highs, except for this day, which looked like a reversal day, if you recall. And then that was 2 Fridays ago. And then we go and make lower highs again. Then we finally breach up, take out the 3,900, push into 3,909, and ultimately end up at 2,750 on Wednesday. And then on Thursday, we come in and we just really have a big move. We saw a spike down in the 10 years. And so now inflation becomes a centerpiece. and the market responds accordingly. So big selling day. We covered 100 points in about an hour and a half in the S&P. Big selling day, and then Friday continued that selling with a lower low, lower high in what was a very highly contested auction last week. You could see that there's a multi-pronged profile with the point of control down here in the 38.38, which brings us back to the 38.30 right here. 38.30, 38.38. Balance seems to repeat itself in the current market. There's some pretty decent structure. And so what is vulnerable today? What's vulnerable is Friday's high ending the one-time framing down, one-time frame down, one-time frame down. That Friday's high is important. That price is 38.58 and a half. The current high overnight's 38.57 even. And overall, we look like we have set up a decent base below us. Keep an eye on the 38 and the 38 area right here. This box here as a foundation of support, if there is any. As it pulls back, we expect it to have a fight here to continue higher, and then look for the 38.80 playing a big role in becoming a target up above. Okay, so that's what things are like. We've had some pretty good ranges. You can see the range bars have expanded to the upside. The normal range, daily range, is up to 59 points now. The most common daily range is 35. And then we could see that volume has picked up, dropped off a little bit on Friday. Volume has picked up as well, as we would expect it to on selling. That's why selling moves very, very fast. Here's the thing. We just continuously have a negative cumulative delta on the daily. Just overall, we just keep going into this downward channel as we push prices higher. So what are we expecting for today? And by the way, if you have not checked out my brokerage, edgeclear.com, please do so. We offer Sierra on TT and all kinds of platforms with a few more solutions on the way. Okay, here's what we've got. So this morning, overnight inventory, 100% long. The expectation is we're likely to breach this overnight high and the prior day's high, ending the one-time framing down 58.50, expecting that to be breached. Looking forward to pull back. Any dip has a strong potential of a buying opportunity. Expecting it to battle at the 62 here, and then I'm looking forward to squeeze into the 80, which is basically Friday's scenario 1. So premature there on Friday. So the primary scenario is just a squeeze, a slow squeeze higher. It is Monday. The secondary is we open auction right at the overnight point of control. We're looking for responsive selling into VWAP or so, expecting it to hold in this 38.45 area, consolidate, make an attempt higher, squeeze the overnight high, and then just basically sit sideways inside of the prior day's range. This is likely to be a rest day today on scenario 2, holding this high volume node here between 45 and 30. So remember, 38, 45, 30, 45, 38, 30. This region represents a big acceptance area right here. And scenario 2 is basically pushing the overnight high and then holding on to this balance zone. That's what scenario 2 is looking for. We're opening in a gap up on the internal, meaning we're gapping up in from the prior close, but it's not an external gap, meaning We're not leaving a gap zone. We don't have a gap zone below us this morning. So the rules are a little bit different. It's likely to be more responsive. With a gap zone, it is likely to be more initiative. So today, it may be a bit choppy on the open, especially with this overnight point of control sitting right here. So overall, just keep an eye on what, with the quality of how the market's lifting. Keep an eye on what it's doing. Again, 58.50, if that's breached, it ends the one time framing down. We may see a quick spurt up into 62, but that doesn't mean that we should be buying it. Just wait for it to set up for you, and of course, follow your plan. Good luck today, and I'll catch you tomorrow morning. Those of you who are Convergent Trading, Convergent members, today is the first day of the month. It's the beginning of the March 30-day challenge. So hopefully you've done the Trade Right program, have got your plans in place, your accountability journal set up, all that on the portal, and you're ready to push forward with the challenge this month. Good luck, and I'll catch you tomorrow morning. Take care.